Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning, with this week's market breakdown video. We're going to take a quick look at the four major U.S. indexes. They're all basically up near those all-time highs. Not a whole lot has changed on the charts since last week, but where we've seen a huge move over the last week or two has been inside the commodity space. And with the Fed coming out yesterday and saying they were probably going to hike rates 2 times between now and the end of 2023, that sent the U.S. dollar up, and it puts commodities under pressure, and we may be getting a change in the commodity space, and so we're going to focus in on that for today's video. But first, as always, let's start with the S&P 500. We made a new all-time high a couple of days ago, marginally. Right, not really a big push here. After the Fed meeting yesterday, we pulled back a little bit. We're still holding over that 4,200 level. The S&P 500 really hasn't accomplished much since April. It's just still continuing to trade inside that sideways range. We're really waiting for a clean break to the upside for that continued follow through. Or, we can certainly continue to chop sideways in this range for quite some time. Let's take a look in at the Dow. The Dow has come under pressure a bit more than other areas of the market. It was a leader for the majority of the year, and then over the last couple of weeks, we did not make a new all-time high. In fact, we still are trapped inside that range, but you can see it is weaker than the S&P 500 chart that we just took a look at. But still, there's not a whole lot to say here. We're still watching to see if we make a new high or we break down below this box. But again, really no movement here since April in on the Dow. Let me take a look in at the Russell 2000. Pushed up, almost went ahead and made a new high here a couple of days ago. Did not do that. It hasn't really gone out of this range since the beginning of the year. We know we had a really, really strong October, November, and December for the Russell, and then it has been digesting that move sideways. We're still watching to see if we can break to new all-time highs, but for now, we're still just trapped inside that range. Now, the Nasdaq did go and make a new high, and you can see what I've kind of got drawn up here on my chart is a potential ascending triangle pattern where we have kind of that flat top and higher lows that are in place. When this does break and actually hold over this for a couple of sessions, there is a higher probability that it keeps pushing. But what I don't like to see is a barely tick above a key zone and then a turn back lower. So what I'm watching for here out of the Nasdaq over the next few sessions is if we can hold that 13,800 level and push back up, then I think things look really good. If we see a couple of days of sharp downside, then this could end up being that kind of false breakout, and that wouldn't necessarily bode well. But still, context-wise, we're up near those highs. We're barely off of the highs. But again, we still haven't really accomplished much over the last few months. It's very similar to the rest of the indexes. Where the big movements have happened this year have been in the commodity space. And before we get into the commodities themselves, let's talk about the U.S. dollar. Again, I'll back this chart up. We'll look at it on a monthly basis because this zone, and this is what I've talked about for quite some time, is super, super important because this is a major multi-year support zone. It actually goes back almost 2 decades at this point in time, this 90 zone on the U.S. dollar. When we zoom in here on a daily basis, we were very close to taking out the lows from earlier this year, which would have given us another lower low with lower highs and could have continued the trend to the downside. However, what we saw here over the last 2 sessions is the U.S. dollar really rips higher off of that Fed news. It's continuing its move here this morning. And what we are paying attention to from a technical standpoint is, can we take out these April highs? Because we still, at the moment, have lower highs that are put in, which is still a bearish trend. So even though we've got a nice push up off of this support zone, doesn't change the fact until we kind of get up over that 93 zone. If we get over that 93 zone, this starts to look like a bottom, and that would be a headwinds for commodities. It's still too early to call it, but this move here off of this low and this push higher here does not bode well for commodities in the short term. Let's take a look at the precious metals first. All right, we're going to back this chart up. So we've got that chart of gold. Now, I've got a couple of different lines here on this chart. This line that goes all the way to the left side of the screen, that is the all-time monthly high close from a decade ago. And we just have been kind of fighting a little bit above and below. We haven't really appreciated past that point. We got back up over that 1900 zone. I said we needed to get towards that 1960 area. We didn't even make it there. So if you look at gold, we have lower highs and lower lows here since last July, August time frame. It hasn't really accomplished much of anything in almost a year after this huge push up. Now, the important levels to watch here on the downside, 1776. We've talked about it a lot. That was the low from November. That was the important breakout zone from April. That was the breakout zone from last April. This is an important area. And then the last kind of zone of support off of this big move that we've got is really that 1670 level. And under that, it's kind of open back until the mid-15s all the way down into that 14 zone. So bulls really want to see this kind of hold on. If we make a lower low once again, that is not going to be good for this chart. Because again, when we back this up and we look at it on a monthly time frame, these are all-time high breakouts and then no price appreciation from that point in time. That is not what you want to see. I will point this one out to you guys. This goes all the way back to 1980. When we made the breakout in 2008, we had a pullback to that major support zone, and then it was straight up for a number of years. This is that support zone. So it's been about a year of sideways action, just like we had in 2008 into 2009, but this has to get going for the bulls to really be excited about it. Again, it was a great run for a while, but it's just been stagnant here over the last year. One of the things we'd continue to talk about was at least silver was acting much better than gold, trading up near those highs, that higher beta area. It still, at the moment, is acting better than gold. You can see we have a series of higher lows, but we haven't made a higher high on this cycle either. So we've got kind of this wedge that's being built that's in here. Bulls really want to see that 26 zone hold. If not, we got support at 24 and then 22. The further we fall, from up here, especially if we fall down and break this 24 level, we completely change the whole context of this chart. So we really want to see that kind of hold right here. Platinum, all right, was holding that 1150 zone. We can back this chart up. Failed right at that 1300, just poked a little bit above, and now it's falling back down to that major support at 1050. Under 1050, I don't like platinum anymore. I really like it still above it. Really, really like it over 1300. This is not the action the bulls wanted to see, but we still have not fallen back below that breakout spot from last October, November, and so that's what we're watching. Palladium made that new high, can't hold above it. In fact, this is fighting right there on that 2700-ish level, which is the breakout that we had from April. A fallback below that goes back to 2500. Under 2500, I don't like this chart anymore. 2500 had about a year's worth of time in order to actually finally push and break through it. If it's only a couple of months and it can't hold over that major breakout zone, that's not an area we want to be in. Copper. Back this chart up on a monthly basis. Copper made that break to new all-time highs, closed over it for 1 month, and is immediately back under it. That is not super bullish action. When we make breakouts to new all-time highs, we want to continue to follow through. No follow-through is not a good thing. So we look at this on a monthly chart. This is a really ugly candle. Obviously, the month is not over, so we have to wait until the end of the month to get an understanding there. But this is a very important level, about that 415 zone. That's where we broke out in April. If it can't hold up above that, then we're back to that 380 zone. And again, I'll back the chart up so you can see where these lines are coming from. That's that really important area from 2012 and 2013. That's kind of that last area of support, or we go all the way back to where we broke out last year in that 330, and that would really not be good for the bull case at all. So, a lot of these metal charts don't look good anymore after the last couple of sessions, and really the last couple of weeks they've just kind of trended lower here in some of them. So that's not what you want to see. Now let's jump in and let's look at the soft commodities. All right, I'm going to back the wheat chart up, and I'm going to look at this on a monthly time frame. Here we are again, potential major breakout over that 730 zone. Can't close the month over it. Falls back down and is continuing that downward move. Now, wheat has a major level at about 600. Under that, this whole saucer kind of gets negated. This is kind of that do or die time in a lot of these commodity spaces where they need to hold and continue to turn around, or they go back to being kind of dead like they were for the last decade. Corn pushed up into that 720 zone, pulled back down. Corn looks better than wheat here, had a much bigger push, but this is not what we want to see. We want to see it over 720. I really like it. Underneath 600, really don't like it. So we're going to keep watching that as well. Let's look in at soybeans. Soybeans could not get over that major resistance level from 2013 on a monthly closing basis. This is a really ugly candle that we have here on a month. Again, the month isn't over, so there's still time to fix it, but look at this. We've fallen back below the breakout spot from April with a potential head and shoulders type of pattern here, right? There is your head and shoulders pattern with it breaking lower. That is not a good looking chart. Anything under this support in that 1350 to 1300 zone, there really isn't much support here on the short term, and that would be, a very ugly move out of soybeans. Now let's take a look in at lumber here. Lumber hit a high of 1730 and is all the way back down underneath of 1,000 in a month and a half. I mean, all we saw in the news, everybody was talking about the price of lumber, the price of lumber, the price of lumber, and we've had a 45% drop here over the last month and a half. It continues to act incredibly weak. So we had a fantastic push out of commodities in the first portion of the year. We've kind of traded sideways for a while, and now all these charts are starting to break down. Is it time to bail completely on the commodity space? Well, again, I don't think we quite have the answer yet, because as we've shown through most of these charts, they're at those levels of support. So I think we kind of need to see those things play out. But it all comes back to the U.S. dollar. What's going on right here is really, really important. Again, I think if the U.S. dollar pushes and gets back up over that 93, that high from April, there's a good chance the majority of the commodity space is going to continue to be under a lot of pressure, and it's probably not an area where we want to continue to focus in on. As always, guys, I hope you have yourself a fantastic week. We'll see you guys next week. If you have any questions, you want to reach out to me directly, you can at mtedeschi@perspectiveofplaying.com or give me a call at 814-580-9881. Stay safe out there and enjoy the week.